Creating a solid financial foundation. Welcome to FittingFinance. A financial plan can assist you in achieving your objectives, whether they be to buy your dream home, take a family vacation, or live comfortably in retirement. A solid plan begins with a clear knowledge of your objectives, but not every plan is the same. Even if things don't go according to plan, a solid financial plan will make use of a variety of financial tools to assist you in achieving your objectives. We'll walk you through some of the essential components of a sound financial plan in this video. Setting a budget. Making a budget is one of the first steps you should take to get your finances in order. This entails creating a list of your anticipated earnings and out-of-pocket spending for the next week, month, or other appropriate periods. The strength of your foundation depends on your ability to handle financial difficulties. You may remain in charge of your financial situation by monitoring your expenditures and adhering to a budget. Consider a budget to be a spending roadmap. It keeps you within the bounds of what's reasonable given your income and future requirements. Emergency savings. One medical emergency can send many households into a debt cycle. Only over 50% of Americans, according to recent surveys, have emergency funds. There are many surprising things in life. A job loss, deteriorating health, or expensive house or car maintenance can quickly strain your finances. Anxiety around such unforeseen and unavoidable occurrences strains every area of your health and well-being. Financial advisors sometimes advise putting money away as a safety net for unforeseen events to prevent this and achieve peace of mind. In an emergency, you should ideally have enough money saved to last you 3 to 6 months, but even covering a month's worth of costs is a significant objective. With regular donations, you can increase the amount in your emergency fund. You might only need to start with a $100 monthly commitment. Conserve. Another way to safeguard your foundation is to set aside funds for immediate objectives. Any excess money from your income can be deposited into your checking or savings accounts. These accounts' interest rates help with budgeting for things like costly home appliances, little auto repairs, and vacations. You will discover the advantages of setting money aside for future needs by maintaining a separate account. Financial assets. One of the easiest and least active methods to increase the value of your money over time is through investing. A variety of investment alternatives are accessible. But before making a decision, a thorough investigation should be done to safeguard your interests. This is because investing frequently carries risk. Predicting returns on investment can sometimes be challenging. Stocks are a popular alternative for investments. These let you own a fraction of a company. Another option is to purchase bonds issued by a business or the government. You also have the opportunity to invest in a pool of security possibilities through mutual funds. Another retirement account, such as a 401k plan. Your emergency, current, and future demands should be supported by your financial base. Utilizing a 401k plan that your work offers as a benefit will help you fund your post-retirement lifestyle. You can select Standard or Roth if your employer offers this option. You can talk to your employer about 401k company matching contributions during wage negotiations. A typical 401k gives you the option to lower the tax rate on your income. Contributions from your pre-tax income are made with this option. Contributions to the Roth 401k plan are made after taxes are deducted from your paycheck. Reductions in taxes are possible with this option when you retire. You will benefit from using either savings account for your retirement plan. How to establish a solid financial base. Establishing a financial foundation does not require you to be in the prime of your profession to begin with. You can be a recent graduate or have decades of professional and life experience. You got the chance to act and make plans for the life you want to lead at any point. You're not required to work alone either. Financial coaching and counseling come in a variety of forms. Financial advisors aren't the sole source of assistance, even though we frequently see commercials targeting the wealthier end of the market. Building requires a foundation wall, a floor slab, and concrete footings to ensure stability. In a similar vein, you need to set up the foundation for your financial life. Building a solid foundation takes time. A financial foundation is the same. Here are some strategies for creating a sturdy structure. Organize your affairs. It's crucial to consider the building materials at hand before laying a foundation. This implies that examining your assets is necessary for your financial well-being. Think about your possessions, your jewels, vehicles, house, etc. You must also consider your responsibilities for a complete picture. This category includes credit card debt, student loans, and other outstanding debt. You'll be able to determine your net worth by listing your assets and liabilities. To calculate this, take the total of your assets and deduct the total of your obligations. Your net worth provides a comprehensive picture of your financial situation. This permits the development of other construction plans. Establish long-term objectives. A home's foundation is constructed with a specific structure in mind. Your financial foundation ought to be oriented towards certain objectives in a similar manner. This entails planning how you will save money. For example, funds saved for a purpose other than an emergency can be used for it. Your goals can include saving for a down payment or other comparable things. Setting goals can help you avoid squandering your savings without direction. A well-defined plan for raising your income can also benefit your financial foundation. You can maintain your financial situation by setting aside money for other sources of income. You should also prepare for the possibility of quitting your job. You could decide when you want to retire and how much you want to have in savings or passive income early on. Make self-defense measures your priority. At the very least, your financial foundation should aim for stability and financial security. This entails taking precautions to safeguard your financial situation. There are definite advantages to emergency reserves for unanticipated events. A major cause of stress that may potentially impair performance is job insecurity. That tension may subside if you know that others are ready for unforeseen circumstances. Emergency money may not always be sufficient to provide the necessary assistance. In addition to what you may already have in place, insurance coverage might be crucial in the event of a medical emergency, job loss, or death in the family. Your insurance should take into account your family's demands, lifestyle, and income. Pay off outstanding debts. For many people, being debt-free is their primary financial objective. Your financial flow is directed toward your chosen needs when you live this way. Your income may be restricted by a mortgage, credit card debt, or other debt. A lender has to get his cut of your revenue to prevent legal problems. Organizing your bills, however, can help you improve your financial situation. A strategy to pay off debts with higher or lower interest rates first should come after this. With the former, you can take a risk and pay off the loans that will have the most impact first. After that, smaller debts can be canceled. Lower interest loans can be repaid first in the opposite order. This makes it possible for money to build up to pay off bigger debts. Debt repayment might increase the amount of money available to achieve financial objectives. Moreover, this strategy is really helpful for raising your credit score. Create a tax plan. Sound financial practices are the cornerstone. You can specifically take advantage of chances that lower your tax obligation. You are not taxed on fringe benefits that you receive from your job, such as monthly auto insurance or non-taxable school costs. For additional employer perks, the same holds. Before making big tax-related adjustments, get advice from a tax expert. Getting advice from a tax specialist is an investment in your future. These experts can provide tax-saving tips. So this is the end of our today's video. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.